Your North Carolina hat. Okay. So thank you very much, Eric. Hey, one thing Michelle reminded me of, the comments don't show up on the video. And so what I'll be doing moving forward is I will make sure I read the comment or read the question. So that way, if you're watching the recording of it, you will be able to see it. Hi, this is Dennis Wilburn. I want to say welcome to everybody to the Making Money Trading Stocks, Options, and ETFs webinar. This is basically a real quick 10 to 15 minute webinar that we do every Friday. I want to welcome everybody who's joining us online. We do offer this as a free streaming video to folks joining on Facebook. I want to remind everybody that all the materials we do present are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication of future performance. Here's this picture of both myself and my son Brandon. Brandon joined us, and you'll see his picture on the team on the website. Brandon joined, actually worked with me back in 2005 after he just graduated from college, and actually has turned into a really good technical analyst. I guess that's what happens when you start approaching the age of 40 years old. You become either much more patient but yeah, Brandon's got a birthday coming up this month, or the month of December 20th. So, yep, he's my son, but then he's also just a fantastic writer, and he also is a good guy from the technical analyst standpoint, and also he's a stay-at-home dad and investor. I want to remind you that discipline is a key that turns knowledge into wisdom. I cannot overemphasize that enough. Oftentimes we try to fill our belly with all the wisdom in the world from a trading trend standpoint, but for some reason it just doesn't quite translate from knowledge into wisdom, and part of that is in the application standpoint. One of the things that we try really hard at active trend trading to do is provide a clear, simple method to do your executions. Therefore, you can convert knowledge into wisdom and also hopefully make some money along the way. Our objective of the Making Money Trading Stocks, Options, and ETFs is just timely, actionable intel review at the end of the week. Do a real quick market review. Here's what I'm looking at right now. We're getting this kind of like a weak rally. As you've seen, yes, the market went back into confirmed uptrend if you're a follower of IBD, but it hasn't gone anyplace. It's kind of, and it's just kind of creaky, if you will. Perhaps the Santa Claus rally is waiting for the talks this weekend. We've got two just huge potential market movers this week. One is, of course, the G20 meeting, and then also the China trade talks. And we should be getting a lot of news coming out over this weekend. And so I'm kind of light going into the market. I'm not really going into this weekend. I'm not in a big hurry to get long or get short anything. I want to see what's going to happen with the G20 meeting and also the China trade talks. The big thing that could be a market mover going into next week is if the U.S. decides, well, we're not going to raise the tariffs to 25% on goods from China. That would be that will delay that until we continue the trades talk. That would be a big deal. Secondly, if you've been following oil has been just absolutely squashed going into going into this time of year. Part of that is seasonal, where we would normally get a pullback in oil this time of year. Part of it is also just there's a glut of oil that's out there, and so OPEC has their discussions next week, also to correspond with the G20 meeting, and if they contain or pull in production, that may give us a little bit of a bounce in oil going into next week. Oil could continue down to about $45, and right now it's sitting at about 51. So $6, $7 from here is where it could find a low. Here's where we're sitting with the active trend trading system. We're about 32, almost 33% for the year. As you can see, all the indexes are up with the exception of the Russell. The Russell's been a little bit of the lagger. It's had really nice moves when it did move, but it's been kind of a lagger compared to the other indexes. NASDAQ and the NASDAQ Composite are the big winners here. Let's take a real quick look at the indexes to see what we have going on. When we look at now, this weekend is the weekend to take a look at two things. One is the weekly, daily, intraday chart, but also take a look at your monthly chart because we're completing the end of November. So take a look to see, are your monthly charts providing you any clarity on what to expect going forward with the market? A lot of the people, some of the other analysts that are talking out there, they're talking about, well, the that 2019 may very well be a down market, or it's going to really struggle. Wouldn't be surprising, given that we've had, been on such a tear for the last almost 2.5 years. That could very well be. Spider, what's Spider telling? What's the S&P telling us? Okay, weekly chart on the left, daily chart on the right. As we have highlighted numerous times, we are getting this basically thrust down, reversal back up, again and again and again. We started over here back in the last part of midsection of October, thrust down, reaction up, thrust down, reaction up, but it overshoots its reaction, actually gives us a nice bullish signal, then reacts back down, not quite a thrust down. Now we're coming back up into the moving average. It's looking very much like a kind of a complex inverse head and shoulders. If we, take off this line right here and we get a breakout above that, that may be an indication that, yep, we're going to go in for our Santa Claus rally. It may pull back a little bit into the 8, and that's what I'm trying to trade. That's what I'm trading the indexes off right now. Is we had this quasi double bottom positive divergence, didn't really give us a great signal down here. And so when it does that, we have to just look at, hey, we're above the 8, we're above the 20, we're stuck at just slightly underneath the 50. So we could, so it gives me the green light to trade anything bouncing off of the 8-20 combo and or this nice uptrending line there. So that's what we got with going with SPY, QQQ, QQQ. Again, QQ weekly chart. This is not a candlestick reversal pattern. It is just not. We're getting a good TSI bounce off the oversold condition. The market forecast weekly condition is starting to turn up on the weekly condition. However, this is just a rally back up into the 40-week moving average, which corresponds to what? To the 200-day moving average. Look at this on a daily chart. We see we're moving up a little bit, but look at the poor. Okay, hold on a second. Eric wants me to add in my larger cursor. I have to find my larger, there, look for pointer. Is that better? Okay. So anyway, what we're getting here is we're getting a nice bounce up, but look at this really crummy volume down here. I mean, so low volume day pushing back up into what? Resistance. The 34 moving average on the way down has acted, if it didn't hit off the 820, the 34 and 50 definitely served as a resistance area. Now, what we're seeing, though, as we see oftentimes, is the more times you go up and hit it, it starts hammering the moving averages to start pointing up. So what's that telling us? Is that basically what we could be in for here soon is we could pull back into the 820 and then a rebound up, check the 50, but then back up into the 100, 200-day moving average. We break through that, then we'll probably want to break this trend line here, but we may get a green light to move into the end of the year. Won't say that we're going to get just a huge move into the end of the year, but it would be a positive move to the upside. And Eric, did that help to get the large red cursor out? Okay. Awesome. Thank you. And let's see, last but not least, let's take an IWM. IWM, what's IWM? Now, this is my preferential index to trade off of these bounces. However, as we can see, it is remaining well below the 34-day moving average, even though we're starting to push up. But look at this volume. This volume is horrendous. I mean, it's terrible. I mean, we're getting a nice push up. We get one good buying day, which was on Wednesday. But look at the rest of the time. Really crummy volume. Now, it's just basically driving sideways. Also, watch the bounces off the 820 combo. If those fail, that would be an indication, hey, I want to be out of this, a potential trade on this. Price action needs to get back up above the 34, hammer into the 50, back up above the 50, and then it'll be basically take out this high here, and that'll give us a green light at least up to probably the 165 level. So that's what we're looking at transpiring right now. But as I said, right now we're getting some negative divergence going on here as we're pushing up to these past old highs. Oh, let's see, where's that? No, it's not quite negative divergence. I thought that high there it corresponds to right there. But as you can see, it's just pushed right up into the trend line. And what's the deal with trend lines is basically we don't want to jump into a trade at the trend line because that constitutes resistance. And so we either wanted to back off the resistance to get another run at the resistance to see if it'll break through. So where's the back off that we want to see? I'd like to see a back off to around the 8-day moving average and then see if it'll rebound and ram through on top of that. So that's what I've got going with that. I will bounce over here to LABU. As you can see, LABU on the daily chart, we really have no signal. If you are a premium member and tuned into our training on Wednesday night, you know that we're going to be really emphasizing paying attention to and trading the leverage. 4 leverage ETFs, the 2 of them that are sectors and the 2 of them that are commodities. And actually 3 of them are actually commodities now. Focus on those. And one of the things we learned about those is we want to wait for the extremes on the TSI, both the daily, the weekly, and also the intraday. And as you can see on LABU, we're getting a really nice, support here at 40, but we bounce up into the trend line. So again, we don't want to buy at the trend line. We'd like to see it either come back down, retest at the 40, and then hammer back through the trend line, or you wait till you get a bounce back above the trend line into in this case, the 200-day moving average, and then see where it goes from there. So LABU, not weekly. It's looking pretty good, but it's just not in a position to buy. And LABD, on the flip side of that, of course, is also In reality, LEBD looks a little bit more more viable, if you would. I would not want to be. Come on. There we go. In viable in that it's pulled back into this downtrend line. Now we'll see if we'll get a bounce back up. It has dropped below the 34, and it appears that the 820 is in fact turning back, turning back over, which would indicate, hey, we're going to go back down to the downside. Remember that, and the reason I'm interested in this is that if it just goes back up to, the 40 or 44 level, which corresponds to $40 on the other chart. Well, from where it's at right now, that turns out to be about a 20 to 24% gain. That's where we want to be focused. And again, LABD looks closer to making that reversal to move back up. Hasn't done it yet, but we'll stand by and wait for it to happen. I don't have a signal right now. And again, I prefer the signals that are down here low at the oversold condition, but if it's finding support, about the negative 25 level, that's also a great place to get in. So let's see, I think everyone is waiting on G20 before trading. Yeah, I think so also, Eric. Thus, I'm not surprised with the volume. Should the two shooting stars on LABD suggest that more down is likely? Shooting stars, are you talking about shooting LABD? Okay, right now, well, let's, over here on the, excuse me, on the weekly chart. Yeah, I mean, basically what that's telling us is just telling us the flip-flop of what we're seeing with LABU, in that these shooting stars that we see here on LABU, they are hammers, and that's where the buyers are coming in. So it's just a reflection one on the other. So they're telling us that that more is likely. What it's telling us is that it seems like it has a precursor loaded to the downside, and with the caveat, it can go back up and test in those areas. I mean, these what appear to be bearish type of candlesticks can stay valid for quite some time, and so the only time that they didn't validate them if it took out the highs at 45.51, but these can stay valid for quite some time and play up in this area for a while before it finally rolls over and shoots down. It's looking with the TSI where it's at right now. Yeah, it's looking like it's favoring the downside, which on the flip side of that would mean that the LABU may be a better trade. But again, it gets back to what's the daily chart telling us also. And the daily charts are telling us that, hey, it may try to bounce back up and do one quick run, and it may not get all the way back up to these highs, but it may get up to the 40 level before reversing. That would be more of a classic reversal where it makes a new high, comes down, tries to rally back up to the new high, fails with that rally, and then rolls over and dies. So sorry for the graphicness. So that's what I'm looking at, guys, and I'm going to get back and just finish off today's session with you. I hope you're finding that that interesting. Those are the focused ETFs, the Magnificent 7 ETFs that we're working with as a premium member. So I'll talk about them in this, on our free webinars, but the nuts and bolts of the actual entrances and all that kind of stuff is reserved for our premium members. Right now, for the active premium members, I'm looking, we're at resistance. Are we going to get a pullback that's going to provide us, input for a Santa Claus rally? We'll see. I'm looking. At this time of year, I'm refining my trade targets, and these leverage ETFs, they can run 5-10% in a daily basis, and so I want to be very quick on taking profits with these. And now is a great time to be utilizing this unless you get a really solid long-term signal. Use the intraday signals to take quick swing trades that last 2 or 3 or 4 days. Take your profits off at 10, 15, and in the case of these entities, sometimes 15 or 20%. Take your profits off. I have closed 3 of my leaps position, my strategy 3 positions. Tesla with a gain of 68, Baba with a gain of 53, Spiders, S&P with a loss of 23%. There's where that's refinement. I currently have open an XOP account where we actually just sold a position on that yesterday, and yesterday. That expires next Friday. Cash flow for November, a little bit over $5,000. I am looking at continuing to strategy 2, and through the end of the year, what I'm going to be doing is refining these so that everybody is on board going into the new year so that we can become more profitable going into the new year. So the next BAM meeting is going to be a webinar, December 8th, setting up for 2019. Again, I'm doing 2 streaming webinars on Facebook, one on Friday, one on Monday. If you want to, get in with that, you'd basically just go to the website, the Facebook.com. There's a link there. Leave us a comment, and it will sign you up to get notifications on the streaming webinars. The Monday webinar is not announced to anybody other than what's online. And so premium, we have premium training Wednesday at 6:30. That's Pacific time. And basically on technicals and that type of thing. And then finally, we're doing some work on just updating the website, which you've probably seen, and also in the process of converting from market into the market action point for the early warning alerts. And so this is one of the major reasons why I want to be trading the Magnificent 7 trades, LABU or LABD. I'll share the information with you. However, the actual triggers for these trades go to the premium members only. But if you want to become a premium member, ending very soon, I have a special offer, 40% off what our regular monthly price, $44.99, and I can't guarantee that this $74.99 is going to stay in place for very much longer, but I can guarantee if a person does sign up, whatever you sign up at, that stays constant, through your membership. As long as you stay have an active membership, that never goes, and that never increases. You go here to this website, here's your password to get in. It's password protection. It's bonus, all caps. I'm running quickly through these because, Russell, we're into the December seasonality where we expect mid-month to get a little bounce in all 3 indicators. So anyway, that's it for today. And let's see, Joe, you asked a question. Why do you leave so much space from your last bar in the edge of the chart? Also, I need to eat I need an email to join the next. Okay, yeah, I'll shoot that to you. You should have got an email on that for the Joe. It went out a couple of times yesterday. So hey, keep the egg growing. Trade wisely, trade profitably. You can join us here, and also presence on Twitter. So we'll be doing the premium members final hour here shortly. So have a great weekend. Aloha, trade well, and prosper. Aloha. Thanks, Mike.